Folks, we are going to talk about Tesla. We're going to talk about Tesla with Taylor from Life Goal Investments. Taylor, how you doing?
I'm doing great. This is an exciting one because so many retail investors own Tesla. I believe in the first quarter, it was the second most bought company of any outright individual stock.
Yeah, and it's also a stock that I will never touch. I consider it a cult stock, and I don't get involved with cult stocks. But I thought it was very interesting. Over the weekend, I don't know if you saw this, but Kathy Wood has come out with her prediction.
Oh, is she a bull on this still?
She's still a bull. She's a small bull. Her base case, not her best case, her base case is $2,000.
This is criminal. We'll get into it.
Just because I like to read both sides, I did seek out a bear because, as you might suspect, there is bulls like Kathy and there are bears. I found one, David Trainer. He's the founder and CEO of New Constructs. Hopefully I'm pronouncing that correctly. He has a price target of $28.
So we just have about 100-time multiple between the two. Not pretty close. This is a pretty tried and true blue chip company, it sounds like.
Yeah. So what I wanted to ask you again, as just a participant in the market, you're a 10-year veteran. I understand all opinions make a market, but I don't recall a stock having this kind of a wide range between a bull and a bear. It seems really odd to me, but maybe I'm out of touch.
No, it is not. It's not. You're not out of touch at all. This is the most kind of one. It's incredibly volatile. So the Tesla entered the year at like 108 and ran to 214 in a matter of 2 months. So that's a 100% return in 2 months. Since then, it's traded off about 25%. And it's interesting. I mean, if you're going to price this thing at 2,000, you're literally saying this thing is going to take over the country, because right now where we currently sit, the price to earnings multiple on Tesla is about 47 times. For context, the S&P 500 trades at about 18 times earnings. So you're looking at, essentially a 3-time as expensive multiple. You're paying 3 times as much for every $1 worth of earnings of Tesla stock than you are for all the companies in the S&P 500.
Yeah. And I think the thing, again, it's entertaining for me to watch. I will never put my money on this because it's just way too, when you're that passionate about something, it is a cult to me. It's what I call it. Logic goes out the window, right? I don't know if this is true. I've never done the math, but I believe Tesla is valued more than the top 5 car companies together. Now, I just said car companies. They're going to say Tesla's
not a tech company, Michael.
Yeah, it's a tech company. I'm like, okay, it's a tech company that sells cars, but okay. But it's and then their margins just came in. You also have the CEO saying, hey, we're gonna basically sacrifice margin to sell units. Then people are talking about full self-driving, but do they really have full self-driving? There's a lot of hope and prayer. I just don't know how you can say 2,000. And frankly, I don't know how you can say 28 either. I mean, in fairness to both sides.
Fair.
But I mean, what's an investor to do other than not play?
Stay away. Honestly, stay away. It's the most. So I'm almost positive in saying this. It was Apple, then Tesla, then Nvidia as the 3 top companies bought by retail investors earlier this year. And it would be, I understand Apple, but Tesla and Nvidia, these are probably the 2 companies I would say don't touch. You don't understand the dynamics that are at play right now. A price to earnings multiple. Earnings are driven by what the company brings in. Price is driven by sentiment. Sentiment can swing massively. You can lose significantly more money on a company that has a higher price to earnings multiple because that compression can come down and be directly in line with the S&P 500. And all of a sudden you've lost 2/3 of the value of the company, and it's still valued like all the other stocks in the stock market. So it's not like you've blown through that, right? And granted, I understand that earnings growth and earnings expectations moving forward is what's driving that high price to earnings multiple. But all of a sudden what you're seeing here is, to your point, is we've seen 6 price cuts on Tesla cars. And so this is something where they don't have the pricing power that they once had. The competitive landscape is getting significantly more robust. The $7,500 tax credit for an EV purchase is now only applying to a subset of their cars as opposed to all of their cars, thus making them that portion $7,500 more expensive to the end consumer, and hence why they have to cut prices and eat into their margins on the other end.
Yeah. So it's what I always thought was interesting, and why I wanted to come with this is, again, opinions make a market, but I it just bothers me when analysts can look at the same company and one can pick 28 and one can pick 2,000. That's just wild. Both sides.
Absurd. Agreed. Both sides know that their answer is nowhere near correct.
Okay.
But they're trying to make a headline. Yes, Kathy Wood does not think that Bitcoin is going to 1 million, like she has said, or whatever the ridiculous pricing that she said. And she does not think that Tesla is going to 2,000. But she needs that company to start to get a tailwind in sentiment. Right now, they have a massive headwind. So I listened to a really good podcast this morning. It's called On the Tape. It's Dan Nathanson, Guy Adami, who's always on CNBC, and my favorite person to listen to, maybe it's because her opinions are really strikingly similar to mine, is Liz Young from SoFi. She's an absolute rock star, and she breaks things down into very simple, understandable layman's terms. But they said in unison, they were like, this is the first time you can feel comfortable shorting Tesla stock. That was their takeaway. And
Wow.
I would not go there myself, but nonetheless, I can see the logic.
Not financial advice. Not financial advice.
Yeah, correct. No, not at all. But I can see the logic and what can get them to that understanding point of this is different than what we've seen in the past out of this company. But shorting that stock too, Elon Musk can tweet a couple things and divert attention. He's very good at that. Listen, last week was a really bad week for him. He had Tesla obviously come out and mark down prices, and the earnings look really ugly. Margins look razor thin, if not even non-existent. He had a rocket go up into space and blow up. Twitter is not on the up and up. So the other concern with this is, like, that is the CEO of the company, and this isn't a normal company, right? This company's success is predicated on him being an absolute visionary. And I do think that, say what you want about Elon Musk, good, bad, and different, I do think we'll look back and say he was the Thomas Edison or Albert Einstein of our generation. What he's done for the world, regardless of the success or lack thereof that comes of Tesla, SpaceX, Twitter, has moved the world forward in a meaningful way, in a hugely positive way. But when he is not focused on anything, that is the recipe for things continuing to die off on the vine. And die off is not the right word, but I think you understand what I'm saying.
Yeah, I mean, he suffers the same limitation we all do. He has 24 hours in the day, and he's got 5 full-time jobs. So that does not bode well for any human being. So correct. Yeah, this is not a call out for what he has done. I was shocked because again, Kathy Wood, we've talked about her a bunch. She's talking her book. She's trying to create that momentum. But I was actually equally shocked that somebody thought Tesla was a $28 stock. I think that's equally kind of like head scratching. So
yeah, again, it's funny. So we talk a lot about investing on our channel. Like, that's we're economics, finance, and investing is essentially what we talk about. And we've been bearish, So as I've been bearish now since we started talking more than a year ago, and it's been the right kind of directional decision. Now there's been blips and things like that, but overall the economy's been slowing that entire time. And everyone says this to me, which is a super fair comment. They're like, yeah, you're just trying to protect your short book. And I'm like, I don't short anything. Our portfolios are long only by mandate. I can't short anything. I want to be optimistic on the stock market, on the economy, but I don't want to lie to you. Would you rather have me come on here and tell you everything is fairy tales and roses? Like, I can do that if you want, but don't say that I'm trying to protect my book. But I guess talking out of the other side of my mouth now, like, Kathy Wood she does not think it's going to 2,000. That is an absurd thought. You can't put math together to get the number there. But she's trying to get that stock to propel off the bottom. There's no doubt about it. And the other guy probably on the other side.
Yeah, of course. Yeah, the other guy's got to be shorting, I would guess. Just a wild guess. I have no idea. But I'm guessing Kathy Wood had a decent Q1. Right, I've got to imagine her portfolio was up in Q1.
So VGT, which is just something I look at real quickly to see what tech stocks are doing. That's a Vanguard Tech Index. That was up 18% as of this morning for the year. So she's, amplified that maybe by 2 times. I would say maybe she's up in that 30 to 40 ballpark, which, by the way, is still probably down 70 from her peak, something in that ballpark. So, when you lose 25%, you got to get 33% back. When you lose 50%, you got to get 100% back to break even.
Exactly. Well, Taylor, thank you for coming by every week. Where can people find you on Instagram and TikTok?
Yeah, follow us at Life Goal Investments. We're having a lot of fun. So thank you for that,
Yeah, you
Michael.
are. And again, you can always get a rant every now and again. So give him a follow. Tell him you always said hi from one rental at a time. Thanks, bud.
Appreciate you.